In today's video, I'm going to break down the crypto sector, which I believe could be home to some of the strongest gains of not only 2024, but the decade, as a major flywheel effect starts to kick in. This sector, in my opinion, will be home to many of the top gaining altcoins in the crypto world. And if you can have a mastery or an understanding of this narrative, I think you'll come out the other side in a very strong position. So today I'm going to dive deeper, give you all the necessary information that you need to start researching this sector, as well as giving you my top altcoin picks from the niche, which I think could be strong performers. I've got a variety of different market caps in today's video. Some of the larger caps around $1 billion for those that want to take on less risk. And I also have some smaller market cap tokens for those who want to take on more risk. So I feel like this video could be very helpful for those wanting to build a well-rounded portfolio. And just before we get into things here, if you do enjoy this type of content where every day I give you the best crypto alpha, whether it be altcoin guides, trading strategies, picks, and more, make sure to click that subscribe button down below and hit that post notification bell. I've got some amazing content lined up for the next few weeks, and I want to make sure I give you guys the earliest crypto alpha here on this channel. So before we get into the specific altcoin sector I wish to discuss, let's just quickly recap where we are in the market. I did a video 2 days ago which summed up my current thoughts on the recent pullback and my strategy. So if you do want to watch that, go onto the channel and watch the latest video where I go through this stuff in more depth. But the TLDR for you here today is, of course, Bitcoin has had a correction. We did see a slight thrust to the upside, a bit of a bounce before things have just started to enter a bit of a lull heading into the end of the week here. Typically on weekends, I don't like making any crazy financial decisions. I think Monday will be a very telling day for the Bitcoin spot ETF flows, which have been the reason for this recent Bitcoin dip. We can see we've had a few red days in the red territory, meaning there is net outflows from the spot ETFs, largely as a result of GBTC unwinding its Bitcoin position. So we know that Grayscale has been unwinding a lot of their Bitcoin, which has caused some outflow in the market, which is obviously weighed up against the inflows. On the more positive side, despite some days last week being heavily in the red, the past 3 days we've actually seen net positive inflows again. You can see on the 2nd, 3rd, and 4th of April. So that is a positive sign. The other thing you can see is that GBTC, whilst they were unwinding massive amounts on the 18th, 19th, and 20th of March, in recent days this has started to tick back below the $100 million mark, outflowing 81, 75, and 79 million. So this is definitely something to watch. This website is amazing if you do want to track this every day like I do. It's called Bitcoin ETF Flow by Farside Investors. It'll give you a better gauge of the ETF flow metrics, which is obviously one of the major constituents driving price action right now. But I wouldn't pin it down solely to the ETF flows. Obviously, we've had a major run up on Bitcoin. It's only natural after, a multi-month major rally that you do see these periods of lulls and cooldowns. And actually into the halving, which is in 2 weeks, by the way, these pullbacks, which we call pre-halving retraces, it is a common occurrence, or at least it has been for the previous 2 cycles. We saw in 2021 a major drop before the halving, a halving pump, and then a sideways accumulation range. Once again, we're seeing a major drop before the halving. Will we enter that sideways accumulation range that we've seen in the previous 2 halvings? Possibly. This is at least one of my anticipations. I think at some point we will see a bit of a boring lull period in the market. This will obviously, if there is further downside, represent amazing accumulation opportunities, because my strategy in the market. I always want to accumulate on these heavy red days, and you best believe in the early to middle stages of a bull run we do get these major red days. We saw it in 2017 with 1, 2, 3, 4, 5, 6, 7 drawdowns of over 30% on the way to new all-time highs. We saw it again in 2021, 23%, 15%, 32, 23, 26% drawdowns, 5 major drawdowns over 15% on the run-up to the all-time high in November. And once again, we have currently seen on the run-up to a new all-time high, 5 major pullbacks. And we can probably expect more as Bitcoin keeps going higher, because nothing ever goes in a straight line. Generally, the theory in a bull market is you want to be taking advantage of those extreme red days by accumulating strong altcoins in quality sectors, one of which today I think is an outlier for this strategy. And you also want to be skimming some profits off the top on extremely green days to make sure that you're well capitalized enough to take advantage of dips. So if there is a major dip on an altcoin you like right now and you're noticing you don't have the capital to actually buy into that position, it's probably because you maybe weren't taking enough profits on the run up. So just remember for next time when you get these massive green days, maybe just siphon a bit of profits off. I was public about the fact I was doing this a couple of weeks ago on my Twitter and on the YouTube, that I was just taking some profits on the table to give myself enough dry powder to buy back in. If you didn't, don't worry, there will be more pumps and there will also be more dips to execute this strategy, but I want to reiterate it once again, just so we're clear. So when we do get these major dips and when you are accumulating altcoins, what are the sectors you should be looking at? Well, I've been very vocal on this channel about my affinity for sectors like AI, crypto gaming, even meme coins in recent times. But today I want to slightly change the angle and focus on a narrative which is tied in to some of these sectors, but maybe isn't spoken about as overtly in the public sphere. And that is, of course, the DePIN crypto sector. So when I talk about AI, you'll notice sometimes I also talk about DePIN, which stands for Decentralized Physical Infrastructure Networks. And this is a really unique narrative because it encompasses the AI sector and the gaming sector whilst providing infrastructure for things like data storage, compute power, etc. So it's one of the building blocks of the crypto industry for many other narratives. And that's why if you just want exposure to some of the highest upside plays in crypto, I think DePIN projects will represent some of the strongest returns in the market. So let's break down what DePIN is now, and then we'll get into some of my favorite altcoin picks from this sector across a variety of market caps. So DePIN stands for Decentralized Physical Infrastructure Networks, and this essentially refers to projects developing blockchain-based management systems for real-world facilities like marketplaces for computing power, real-world data, file storage, which are all really important components of the crypto ecosystem. DePIN is unique because it uses incentivization systems powered by cryptocurrency to build reward-based systems for providers of crowdsourced physical infrastructure services. So although DePIN constitutes a lot of different verticals, I want to focus on one in particular, and this is compute power. So compute power is a scarce resource in the global technological landscape because companies like Nvidia can't mass produce enough GPUs to possibly fill the demand for that compute. Why? Because we have emerging sectors like AI, which are especially compute intensive. We're entering a digital landscape where a lot of the world's infrastructure relies on physical hardware. If you want to do something simple like hosting a website or hosting servers for a video game, pretty much anything, social media, that all requires compute power. And a lot of the time it requires cloud compute power because it doesn't make sense for companies to have warehouses full of physical hardware. So this demand for compute has led to obviously what is a worldwide chip shortage, and that's one of the reasons why Nvidia, who is the leader in this space, has been rocketing in terms of profitability and thus market cap. So where does crypto factor into all of this? Well, DePIN is very unique because unlike other sectors in crypto, which don't have much of a real-world use case, they don't really solve a real-world problem. Decentralized private infrastructure networks, specifically those that offer compute power, are solving a major problem because they actually increase the accessibility to this compute power and in a lot of cases make it cheaper. So traditional companies all around the world that need compute can tap into crypto's networks. And this is only possible because of the blockchain. How else can you incentivize users to upload their compute power? How else can you democratize access to compute to make it cheaper and lower the barriers to entry? Well, the only way to do it is through crypto. So it's a very unique niche because there are a lot of other applications which aren't really needed in the market. There are a lot of crypto games which are forced into being crypto games and they don't really need a token. There are a lot of applications which include tokens that aren't needed. DePIN is very unique because you need the token to reward users and you also need it to power the distributed network. Without decentralizing it, oftentimes this is done via nodes, then there's no way to democratize democratize access and the entire system doesn't work. So it's a very unique narrative, because if you think AI is going to be a big thing, if you think demand for compute power globally, not only in crypto, but in the traditional world, will continue to be a thing, and if you think that demand will continue to grow, then DePIN is an obvious bet, not just for this cycle, where things like AI and crypto gaming might be hot, but also for the next 5 to 10 years. So it's very interesting, because a lot of my meme coin bags, I don't necessarily know if they're going to be here in the next 5 years, but DePIN, it's a very different story, because the possibility that the genuine flywheel takes off in DePIN is quite strong, and if it does, some of the biggest gains won't even just be this year. They'll be in 2027, they'll be in 2028, 2029, maybe even the 2030s. So it's one of the only sectors which over the last few months I've really come to accept is, in my opinion, going to be needed and around in 5 years to a decade. A lot of the other crypto landscape is dubious at best, and thus we trade it with a much shorter term time horizon. Now, does that mean it can't perform well in the short term? No, I actually think it can, because it harnesses narratives like AI and gaming, but it's also good to know that there is very strong long-term upside here, which obviously makes how you position and invest in DCA, slightly different proposition. If you've got a long-term outlook on something, then it becomes easier to DCA during these major dips. If you have conviction in a narrative, it becomes easier to hold that narrative through the downturns like we're currently seeing, because you've got that longer term conviction. And this is something I always recommend in crypto. Have conviction in a narrative. If you don't invest in a coin, because if you don't have conviction, it's going to be very hard to hold through the rough times, and then you won't get exposure to the good times. Going back to my point about the DePIN flywheel, how does this actually work? Well, you can see it in front of you. This is from the Masari DePIN report. Token rewards incentivize supply-side participants to deploy infrastructure. So these are users that are supplying things like compute power, or running a node to validate, let's say, a decentralized storage network, and they're obviously getting rewards in exchange for essentially uploading their compute power or validating a node to run a network. As the network's supply side grows, so as more people contribute to the network, devs, product builders, and end users are attracted. Obviously, this is because they get access to a larger user base. And also, the more people contributing to a network, the more decentralized it becomes. Fees generated from end users utilizing a network's services attracts more service providers. Then the protocol's token models create a relationship between network usage and token price. AKA, the more users, the higher the token goes. So it's an interesting flywheel effect, because the more people contributing to a network, the more activity occurs on the network, and the more developers are incentivized to develop, users are incentivized to use, then that generates more fees in turn, because network usage increases. Of course, that then leads to token price appreciation. As the token price goes up, what do you know? More people are incentivized to deploy infrastructure, because they're making additional yield, because now the token price is higher. And as the token price goes up, there's also another flywheel which isn't mentioned here, which is, of course, the increased sentiment, the increased awareness. You guys know how the crypto space works. Typically, a token going up is the best marketing that a network or a token could possibly have. No marketing spend in the world is going to achieve a greater effect than getting holders of your product, because then they're financially incentivized and aligned with the project and create noise and social media buzz, etc. So it's a very unique flywheel, and this is one of the underpinning elements underlining my thesis towards the DePIN landscape longer term. But of course, as I mentioned, shorter term, I think there's also a massive opportunity in this space, especially when we get major dips. So now let's discuss some of the tokens that I'm eyeing in this niche. I have a variety of tokens to talk about today. Some are in the multi-billion-dollar market cap range, some are just in the hundreds of millions, and some are very new and some are much older and have been around for years. So I've got a nice diversified array of altcoins to discuss, and this is because I have a nice diversified DePIN portfolio, because I not only want to hit the compute power providers, I also want to get some exposure to the decentralized storage vertical, because that's obviously very important in this digital economy to have somewhere to store data. I also want exposure to privacy, because DePIN actually enables more efficient privacy service providers, which can offer a massive benefit to users. That's a narrative that I'm extremely bullish on, and so on and so forth. So that's why I've got an array of alts today. Let's start by discussing Ator. Ator has been an absolute beast in recent times, and I often talk about on these videos how I always look at relative strength in order to make decisions around what tokens I want to DCA into. Because if a token's showing relative strength on dips, it's very likely it'll continue to outperform on pumps. Something like Ator fits this thesis immaculately because they've barely had any drawdowns and have been making higher lows and higher highs for the last few months. And this is off the back of a couple major announcements for the Ator network. Before I get into them, what is Ator? Well, essentially, Ator is the anonymity layer for DePIN. So they're building the largest global anonymous routing system, which leverages a decentralized privacy protocol, which they've created, on-chain incentives, and signature hardware to rapidly scale their network. So it's very unique because they've not only got this software element via their decentralized privacy protocol, but they've also got hardware in order to reward users. And this is what makes it a bona fide DePIN product, which incentivizes more users to tap into the network, run the network, and also get a benefit at the end. This is something we discussed when we talked about the DePIN network flywheel earlier in the video. So when I reference hardware, what I'm referencing is their new relay machine that essentially enables you to secure your home network. By plugging it in, you essentially get a privacy protected network. So your smart fridge, your devices that connect to the internet, so your iPhone, your MacBook, etc. These are now all protected because your internet is protected from attack vectors when you plug into the relay router. So even non-crypto natives get a benefit from using this machine because they're getting a more protected and private network. And this is especially increasing in importance in a world where a lot of our information is online. Similarly to how you would want to use a VPN, this offers you a physical way to protect yourself. However, the interesting part about this is that it also doubles up to enable you to earn yield for validating the network. So this device doesn't only offer a benefit to the user, it also helps validate their entire decentralized network, which obviously means you earn a reward for doing so. So you're actually getting paid to make your network more secure. And that's one of the really interesting elements that they're building here. As I said, not only a software play, but also a physical product play. And I think this product actually almost instantly sold out. So there's a lot of demand. And this is one of the only ways that you can create a true decentralized network. You can only create a decentralized network if participants are adequately incentivized to contribute to the network. And obviously, not only having yield, but having some sort of tangible benefit like privacy incentivizes more people to use it. And then the flywheel kicks in, as we discussed before. The rewards increase, the supply side grows, the fees increase, and then the protocol ends up going up in price, as we discussed with the flywheel. So hopefully now you have an understanding of it happening in real time. Ator is also interesting because they're not just a DePIN play, they're actually strategically partnering with a lot of AI protocols. So it's also an AI proxy play, which is obviously a super hot narrative in crypto. So it kind of ticks a couple boxes. It's not only DePIN, but now it can also be considered an AI protocol. One of these announcements came via their new alignment with IONET, which is a cutting edge decentralized GPU network to Ator. So they're undergoing a joint research program to combine the best GPUs and privacy in DePIN. And the very interesting thing about Ator is that it's not just limited to a partnership like this. It could partner with pretty much any compute network, AI facilitation network, in order to offer a benefit to not only their users, but also the users of the Ator network itself. So aside from fundamentals, there is a lot of hype being built on the price side. Someone like Alex Becker has been talking about Ator a lot. He says the snowball effect of the network with all of AI DePIN adding Ator to their infrastructure is going to be straight stupid. So it definitely is a play on network effect, but the valuation, in my opinion, is still reasonable. Now, obviously, you do want to take advantage of these major dips. We did get a big one when it went from $3.50 back down to $2.40. Even recently, it went from $3.40 to sub $2. These are the best times to accumulate. That is generally my accumulation strategy when it comes to these altcoins. At a 300 mil FDV with a token that's relatively capitalized in the market, so with not as much dilution as other products, it's a decent proposition in my opinion. It's cheaper than other networks I'll speak about in today's video with, in my opinion, just as, if not more, upside. So Ator is one that I have been accumulating for the aforementioned reasons. Let's move on to some other altcoins that I've been accumulating. The next one I want to discuss is EOS. This comes at a slightly higher valuation, but is one that I think has a lot of upside due to the fact that it's not only a DePIN play, it's also a network for data storage and streaming. So the AOS network is extremely versatile, and I do like these protocols that can hit a variety of niches and growth verticals. So you'll notice an overlap here. Why am I talking about things like AOS and ATOR? Because they combine a bunch of different narratives: AI compute, data storage, video streaming. They've got their nodes for people to earn yield. It's a very diverse ecosystem, and I must say what the team's been building has been super impressive, and that's obviously why we've seen this really strong price action this year with the token rocketing. By the way, I mentioned this at 18 cents. It's now sitting at 78 cents. It hit over $1, so congratulations to everyone that got into that trade as well. But I don't think it's quite done. Why? They're making some major ground here. I want to recap what they've done in March. So they launched their AOS W3 IPFS, which brings next-gen IPFS to Web3. That was a massive announcement. They expanded the W3S ecosystems with a multitude of new partnerships and use cases. We're going to speak about one partnership in a second, which was massive. They kicked off the W3 IPFS launch campaign. They released the AI vision for that as well. They launched their D-Transfer DApp, and as I mentioned before, big partnerships with the likes of Alibaba Cloud to boost their AI storage and streaming services, which is obviously massive when you have these big players on board and also contributing to the network. So basically what they're going to be doing is using Alibaba Cloud to improve their Web3 AI data storage and streaming services. So this is one that's on my accumulation radar. We are now seeing a decent pullback for those that missed the entry. It went to over 1.1 billion. It's now sitting around 850. That's definitely one to have on your accumulation list for these extreme red days. Let's move on to some of the other slightly higher market cap tokens now in today's video, and then at the end I'll actually go through the full list of tokens and give you my general thoughts on how to position yourself in this narrative. Arweave is another one that I'm very bullish on. We have had a major pullback, which is great because I actually missed the run up. So I didn't own a whole lot of Arweave. I had a pretty small bag around $10. So any major pullbacks, I'm personally lapping up because, yeah, as I said, I missed the major run and the announcement of what was a really crazy development in the ecosystem with their supercomputer. So basically, their supercomputer is an absurdly scalable compute layer designed for social media and AI. So they recently released the public testnet for Arweave AO, a scalable blockchain network built on its data storage platform. So Arweave first started out as a decentralized data storage platform via the Weave. They have many terabytes with the data already being stored on the network. You can essentially store your data forever using the network by paying once, which is a massive value add. It makes data storage a lot cheaper than its traditional counterparts like Google and AWS. But of course, now having the upside to a decentralized network is massive, and the market loves infrastructure plays. So at 2 billion, I think it's decent. It could go lower, but this is one that is on my list as well. Another one that's on my list is Gaiman. This is one that I was an early investor in. And Gaiman's a very interesting protocol because it hits a variety of verticals as well. So they're an L2 on BNB. They're the world's biggest source of decentralized GPUs. They power AI tech, and they're fueled by 350,000 gamers. They have one of the fastest gaming chains in crypto. So they obviously have exposure to crypto gaming, but technically through their decentralized GPUs, they are also a DePIN compute provider, which could tap into a variety of verticals as well as AI. So Gaiman is one that hits a few key narratives. You will probably look at the chart right now and be like, whoa, the chart is like down only. This looks terrible. Well, actually, it was a really successful launch in my opinion. It launched at a 526% or a 6.26x price performance from its IEO. From its IDO, it's up a 5.4x, and from its private sale, it's up a 6.26x. So I would say overall, that's pretty successful. It launched on Bybit and Gate, and CeDeFi stakers also had a chance to get into the IDO via CeDeFi. So it's now sitting at a $1.5 billion FDV. Let me give you a little bit of alpha when it comes to not only Gaiman, but new launches. A lot of the time, you will see new launches have price action like this. Why? The price often pumps on launch as it has a lot of listing hype, a lot of people speculating on where the value will land. Then you often do see a major sell-off. Why? Because the early buyers do end up taking profits, and early private round investors that have a TGE unlock will often start selling off their bags over the first few days. So this isn't exclusive to Gaiman, but across a variety of new launches, you will see price action where the token bleeds for the first days, if not weeks, before that accumulation phase finally results in a major breakout if you are bullish on its price potential longer term. Obviously, some launches, they're down only forever because they launch too high and then there's just sell pressure, sell pressure, sell pressure. But for the ones with strong narratives, they often do have nice comebacks. Now, I can't say for sure what Gaiman's going to do in terms of its price action, but what I can tell you is I have had success in the past DCAing into these protocols, usually 1 to 2 weeks after launch when you get these major sell-offs. What you can also do, if you don't want to catch a falling knife, just wait and see if price momentum returns. So if you are on a chart, you could probably draw out a resistance level around the 0.02 section. You could also wait for the break out of that level and play the retest if you just want to go a little bit safer. So it depends on what your strategy is. Obviously, you can DCA down if you're bullish on a protocol and try and average into a position, or you can wait for a major breakout. And although that gives you a slightly higher entry, it can mean you're not catching a falling knife if price continues to bleed for an extended period. Gaiman also announced partnerships with Aether Cloud, and they have partnerships with a variety of other providers in the space, which is obviously massive because Aether is a new launch, which is one of the strongest DePIN projects in crypto. And these partnerships are beneficial for both networks because they can share GPU resources to enable their respective clients to tap into compute power. Aether is one, actually, that made my #1 list on my AI video. As I said, there's a lot of crossover between DePIN and AI. Aether made the S tier of my tier list just because I think they're building an absolute behemoth that is perfectly set up for enterprise clients. So they're not a B2C solution like a lot of these other DePIN protocols. They have a very strong B2B presence. Of course, though, users can contribute to the network via their nodes. Their node sale recently went live. It was one of the biggest node sales in history with over $100 million raised. This is one that I'm an early investor in, and I'm excited for the launch, which is upcoming, I think, in May. So definitely look out for this. If you didn't get your hands on a node, TG is just around the corner. So this is one that I'm also looking at. Now, to summarize my thoughts on DePIN, because I've given you a few interesting picks, you'll note that I haven't mentioned things like Render, Filecoin, and Akash in this video. Akash is a network that I like. I just think it's slightly smaller than some of these newer launches that, I mean, like IONET, Aether, we recently saw Gaiman launched. It is a highly competitive space, and when you have new launches, there is a bit of dilution. So that's why in the short term, I don't know if Akash has the super strong price performance in it when, in my opinion, there are superior products launching. That's just my opinion, although I am interested in Akash generally speaking as a network. Filecoin and Render, I love both. Filecoin, I think, is one of the strongest decentralized storage plays alongside AR. The only thing is it's higher in market cap, so you do have to make a decision. How far down the risk curve do you want to go? Do you want to go for some of these cheaper DePIN networks but take on more risk? Or do you want to go for some of these bona fide networks that have been building for half a decade and have big backers but come at a premium? That's something that you have to decide where you want to weight your portfolio in terms of market cap. But what I recommend is you simply get a piece of paper, or you can do it on Google Sheets, write down 5 to 10 billion, X%, 2 to 5 billion, X%, 1 to 2 billion, X%, 0 to 500 mil, X%, 500 mil to a bill, X%. And then you can kind of weight your risk tolerance so you can make sure your weightings are aligned with your desired risk tolerance, because sometimes what ends up happening is people will overweight themselves to these top ones and then they won't give themselves the 100x, 50x upside that these lower ones present. And sometimes people will overcapitalize in these and then take on too much risk, and the better risk adjusted play in the end ends up being some of the top protocols. So my solution for that is everyone's different, but make sure you have a percentage weighting that aligns with your goals across a variety of market caps. So that is my take on the DePIN space. It's a vertical that I'm extremely bullish on. I think we'll see major upside over this sector, not only in the next 1 to 2 years, but also potentially in the next 5 to 10 years. I think some of the biggest crypto networks will be in the DePIN sector once we see this flywheel start to kick in, because we haven't seen it fully kick in yet. It's only just the early stages of this type of tech, and we haven't really seen demand for GPUs like we have in history over the past 12 months because of this, rapid demand for GPUs. In that 2021-22 period is where the shortage really started to kick in. So I'm excited to see, with this increased demand and now with genuine bona fide protocols launching and developing in crypto, what ends up coming out of it. It could be fireworks. So I hope you did enjoy today's video. If you do like this type of content, make sure you click the subscribe button, hit that post notification bell, and I will see you in the next video. By the way, I know I've missed some daily uploads recently. My family's actually been visiting me in Dubai. It's been amazing to see them. Hence, I've taken a few days off the market, but I will be getting back into daily uploads starting mid next week after Paris, because I'm going for Paris Blockchain Week, and then I'll start to ramp my uploads up again. I'll try not to miss too many days in the meantime, but obviously when you're traveling, it is difficult to get this content out because Believe it or not, it's really time and research intensive to produce these videos, but I love doing it and I love the community that we're building here. So thank you so much for watching. I'll see you in the next one. Peace out.